سلامان تامان على سيدنا محمد الذي تنحل به العقد وتنفرج به الكرب وتقضى به الحوائج وتنال به الرغائب وحسن الخواتيم ويستسقى الغمام بوجهه الكريم وعلى آله وصحبه في كل لمحة ونفس بعدد كل معلوم لك. اللهم صل صلاة كاملة وسلم سلاما تاما على سيدنا محمد الذي تنحل به العقد وتنفرج به الكرب وتقضى به الحوائج وتنال به الرغائب وحسن الخواتيم ويستسقى الغمام بوجهه الكريم وعلى آله وصحبه في كل لمحة ونفس بعدد كل معلوم لك. اللهم صل صلاة كاملة وسلم سلاما تاما على سيدنا محمد الذي تنحل به العقد وتنفرج به الكرب وتقضى به الحوائج وتنال به الرغائب وحسن الخواتيم ويستسقى الغمام بوجهه الكريم وعلى آله وصحبه في كل لمحة ونفس بعدد كل معلوم لك. اللهم صل صلاة كاملة وسلم سلاما تاما على سيدنا محمد الذي تنحل به العقد وتنفرج به الكرب وتقضى به الحوائج وتنال به الرغائب وحسن الخواتيم ويستسقى الغمام بوجهه الكريم وعلى آله وصحبه في كل لمحة ونفس بعدد كل معلوم لك.
Bismillahirrahmanirrahim. Assalamualaikum and salam Jum'ah barakah to all. We will begin this session soon. To gain barakah, we begin this session with Umul Kitab Al-Fatihah. Auzubillahiminasyaitonirrajim. Bismillahirrahmanirrahim. Alhamdulillahirabbil alamin arrahmanir rahim maliki yaumiddin. إياك نعبد وإياك نستعين اهدنا الصراط المستقيم صراط الذين أنعمت عليهم غير المغضوب عليهم ولا الضالين آمين رب اشرح لي صدري ويسر لي أمري واحلل عقدة من لساني يفقهوا قولي. Welcome to 90th Islamic Banking and Finance Discussion Series. This discussion series is brought to you by IUM, Islamic Banking and Finance, a center of excellence and postgraduate institute at IUM. And this session is also currently live on FB Live. I'm Dr. Razali Harun, Head of Research of IUM Institute of Islamic Banking and Finance, moderating this session. Our guest speaker today is Madam Nur Azwa Muhammad Marzuki, Director and Head of Islamic Finance at MUFG Bank Berhad. Welcome, Madam Nur Azwa. Welcome, Madam Nur Azwa. Yeah? We are very fortunate to have you here today. Okay. Now, the topic for today is Islamic banking as new entrant practitioner's perspective. This topic is highly relevant as the institute alone, for your information, which is specializing in Islamic banking and finance, has on average between 50 to 55 postgraduates finishing their studies every year and join the job market. So the insight from today's series will definitely benefit the audience who may have planned to join or rejoin the Islamic banking industry. So the arrangement of the discussion series today, that the session will end at 4:30 p.m., including 10 to 15 minutes Q&A. So dear audience are welcome to post the question in Zoom chat. I'll read the questions after guest speaker done with her presentation. So that is the arrangement of the discussion series. Now, before we begin, let me introduce Madam Nur Azwa. She is an alumni of IUM. Yeah, she is an alumni of IUM. She graduated with a Bachelor in Economics, minor in Sharia from IUM, and MBA also from IUM. She joined MUFG Bank Malaysia Berhad back in 2013, currently serving as the Director of Islamic Finance. The bank was then known as the Bank of Tokyo Mitsubishi UFG Malaysia Berhad. Her key role during the early years in the bank was to set up and develop a new Islamic banking infrastructure to serve the bank's customers, covering local and global corporates. The customer segments include both Japanese and non-Japanese corporates. During her stint in the bank, she has led various inaugural Islamic finance projects that have spurred new Islamic business opportunities for the bank. Overall, she has over 26 years of banking experience, including early years in local commercial banks, merchant bank, and regulatory environment. Prior to MUFG, she was with the RHB Islamic Bank Berhad as the head of product and strategy. She began her career in Islamic banking when she joined a regulatory body, Labuan Financial Service Authority. Her position then involved the development efforts to promote Islamic finance, business, and governance. Now, without further ado, I now invite Madam Nur Azwa. Thank you. It's mute, Madam, yeah? Can you please unmute?
Okay.
Okay, thank
Better?
you.
Okay,
Yes,
clear, yeah?
yes. Please welcome.
Do let me know if there's, I think I have issues a bit with my microphone, but do let me know if it's not clear.
Yes.
Okay. Assalamualaikum warahmatullah. Very good afternoon to everyone. Thank you, first of all, to the Institute for inviting me on this discussion series. Basically, today, if you can see, the title is New Entrant, yeah? But perspective that I'm actually prepared is looking into more of new entrant as an institution, not as an individual entering into Islamic banking environment. Prof, if I could probably share short slides, basically.
Yes, please.
Hold on, yeah, give me a minute. I don't think I can send it over now. Probably I'll send over to one of the team over there, Ponastina, maybe. Just give me a moment. Okay, is it okay now? Everyone can see the slides?
Yes, madam, we can see now. Yes, please.
Okay,
You may proceed.
okay. As I mentioned, the concept or the perspective that I'm looking into is more of practitioners, as in the bank as an organization when they first wanted to enter into Islamic banking environment. So basically, four short key points that I'm gonna share with everyone. I'm not sure some of the audience probably have already known Islamic banking landscape in Malaysia or in the global market, but I try to summarize as much as possible and not to go too much deeper, because maybe some of you already doing a lot of research on Islamic banking in the market. Basically 4 points here. Brief landscape of the Islamic banking, um, new entrant within Islamic banking industry, internal and external considerations as an organization when they want to enter into Islamic banking of an established environment already, and also what are the current challenges. Although this is looking into perspective of organization or banks moving into Islamic banking, but I think those who are new to the market, maybe personally you want to enter into this segment of industry, you might be able to understand overall how the market is, and you can probably adopt that into your personal aspiration. Yep. Okay. Just to give a short brief on the global market, Islamic banking in the global market is very much crowded. So I would say more than 250 Islamic full-fledged banks worldwide. And as you can see, number of markets that going into Islamic banking mainly has always been in the Middle Eastern and Asian market. But as you can see in other markets, more and more Islamic banking full-fledged are being set up. But there are also Islamic banks that are merging and also closing down, probably because of the capital issues and some of the commercial issues that they are facing throughout the years. Particularly, we've seen also there are over 20 years, we face various phases of financial crisis. So that also give impact to some of the banks merging into small few entities, and probably even close down for certain matters. So probably the 250 Islamic full-fledged bank, the global market would be a fair number that I would say in the current environment now. And of course, some of you would have seen figures in trillions, the markets currently. And in terms of rating, the current landscape, of course, Saudi Arabia and Malaysia are the most active ones. And number of banks, as you can see here, this is, I think, figures into 2021. 16, they're referring here to full-fledged banks, meaning those a subsidiary setup instead of a window setup. Yeah. And okay, for Malaysian scenario, this figure is as of December 2022. They might not have included the new digital bank, Aeon Digital Bank, that just came in. Basically, these are the full-fledged Islamic bank. This is, I would say, the key ones, but you would be seeing in the market Islamic banking window setup in a different license. There are other merchant banking license and also stockbroking firms that may have so-called the window setup. These are the key commercial banks that you can see here. So even from these 22 banks in the local Malaysian scenario, it's already, I would say, very much crowded business. So as new entrant into the market, as organization moving into the new market, a lot of consideration has to be taken, not just internal organization consideration, whether they have the capabilities to enter, but also external environment, regulations, market market familiarity with new names, right? As you know, even us as an individual consumer, we always tend to stick to one or two preferred bank due to familiarity. So what more a corporate that going into choosing banks that they want to deal with, they would also look into trust and relationship. Yeah. So as I mentioned, these 22 banks are already established banks. Opening up a new one as a new bank is another challenge. It's another great challenge. Okay. Probably as I move into the next slide here, I wouldn't want to go very detailed on it. It's very much, you can find the information out there. But most important that I want to show that the gap between 1983, when the first Islamic bank was set up in Malaysia, where there was barely nothing, no benchmark in the market, how an Islamic product should be offered in a banking environment. So you can see from 1983, first Islamic bank, up until 1998, the second Islamic bank, I would say that a second full-fledged Islamic bank, it took about a few years also for that to become another bank to be set up. In between, from 1983 to 1998, there were so many new regulations coming in, banks coming in, doing a trial and error products that might not be fully Sharia compliant at that point. But later on, because of the number of more banks coming in, more products are being compared to each other. Even regulators are learning from the markets, and scholars coming in to understand also, not just being academicians, but they also contribute a lot in terms of looking into combining theoretical banking products, theoretical fiqh into a proper commercial banking setup. So over the years, a lot more banks have been set up. And most importantly, because I'm in the position of working in an Islamic banking window environment capacity, so I'm more interested to maybe stress more on how a smaller setup going into a bigger market that we have concerned, probably I can share with everyone here. Okay, these are the considerations. Maybe you've seen in the market all these big names. You've heard of them. You've been one of their clients. But those were the banks that offer full-fledged offering. You see these banks offering retail, consumer banking products to clients, but there are certain banks that are not offering retail. They are only offering corporate products only. So you might not hear their name very frequent, but they are also big banks. Like the bank that I'm attached to is MUFG Bank Malaysia Berhad. That was called Bank of Tokyo Malaysia. The bank already in Malaysia since 1957, and they have grown over the years to become a fledged commercial bank. And of course, in the last decade, we've started the Islamic banking window, the first time even for any Japanese banks in the global market. Okay, as an organization that going into a new market in Islamic in banking environment, there are a lot of consideration for the bank to come in to establish a business. So here you can see that bank will always think of feasibility and profitability and sustainability of Islamic banking business. So that's why probably those who have been in the market or involved in financial market, you would realize that after Bank Islam in 1983 and then Bank Muamalat as a full-fledged bank, over the years you will see you saw the full-fledged conventional banks at that point in time, all the big banks, public bank, RHB, were going into windows, most of them. but migration into Windows, migration into subsidiary of full-fledged coming in around the year 2000, 2005. That was I think spur a lot more development of Islamic banking, because most commercial banks from window becoming a full-fledged. And the other consideration for them, whether they want to set up a window or not, is also include they need to understand the environment infrastructure of the Islamic banking business. So these are the considerations when they want to set up. It's either they want to set up a full-fledged, meaning to say they have to set up a full subsidiary, incorporate another company to become a bank, or they can use current license to set up a department called Window, Islamic Banking Window. So that's lower cost and less governance in terms of setting up a new board members and stuff like that. And onshore and offshore, I don't know whether some of you understand what onshore and offshore means. We will talk about that later in the slide. Next is tax is also a consideration, because different jurisdiction will have different tax regime. In Malaysia, we do not have tiered regime, meaning to say banking or mostly companies beyond banking, in fact, are taxed at a local rate of 24%, I think now, 24 or 23%. In an offshore banking environment, that means you are not offering in a local currency, for example, Labuan offshore, or if you have heard about Dubai DIFC Center, maybe you have heard the Caribbeans like Cayman Island, British Virgin Islands, or there are other whole European financial center like Liechtenstein or even Luxembourg financial center. These are an offshore center that offer banking in a setup of a foreign currency. So they don't offer in setup with a local currency, because these will not attract local tax. So these are also a consideration, whether offshore or onshore is more suitable for the environment. And tax is different from different jurisdiction and different regulatory requirement. And also the client segments and product offering. As I mentioned, some may not want to offer retail. They only offer corporate, and some probably looking mainly into commercial and corporate, right? I'll go very fast on this. It'll be very, very dry. Malaysian banking environment, as we know, governed in the past. There's a BAFIA, the Banking and Financial Act, and I can't remember, 2012 or 2011. The act has been changed into Financial Services Act. So conventional banking business will have to be governed by this, and the Islamic full-fledged will be governed by this. But again, if the conventional bank opening up window, they will have to be governed by both. So you need to understand the requirement of the conventional FSA. They need to also understand the requirement of the Islamic Financial Services Act that goes on share requirements, prudential requirements, business conduct, consumer protection, and these are all related to Islamic banking as well. So both those window setup that has conventional banking license would have to be governed by two licenses. So those who intend to work in this environment would need to understand that as well, right? Okay. I may not want to go deeper, but there are various requirements, whether you're a full-fledged or subsidiaries or windows. So of course, being a full-fledged subsidiaries capital is always a concern. Yep. Okay. And these are particularly dual banking system, which means in Malaysia we have both conventional and Islamic, and those with having countries that also have, like Malaysia, conventional banking system with Islamic window. Yeah. And these are the different onshore and offshore that I mentioned. Onshore, just typically banks like you've seen every day, the one that you're banked in with, basically deal with resident or non-resident. If you're a resident of Malaysia or even you're a non-resident of Malaysia, you will still be able to do or deal with the bank, be the client of the bank. For offshore, basically, you are non-resident and then you intend to do business outside and not in Malaysian currency. So for an individual company, you want to go for offshore because you will not attract a local tax. So these are for even organization going into a new business, Islamic business, they will have to think of this, whether which segment they are serving and which setup they want to go. If they want to go into Malaysian local companies and deal more in ringgit, and they know that the business will come in ringgit, they will have to open a business uh, onshore in Malaysia and be governed under Bank Negara. If they want to do more of non-ringgit business and deal a lot with outside Malaysia, they may want to open up for a bank in an offshore jurisdiction like Labuan offshore, or DIFC, Dubai, or even in Singapore, they have different regulatory environment that allow for onshore and offshore at the same time. So they would have to choose offshore in case of foreign currency business. Okay, these are the internal, external consideration to enter into new market. Yeah, internal consideration, or probably, Prof, I can stop now if there are any or there are questions or even things that you might want to discuss more, so that I could go more focused on areas that be of interest with some of the audience.
Yeah, I think that yeah, it's a good thing to brought up. So basically, it's fine, except that there was a question from the floor that
Mm-hmm.
asking the 22 banks that you mentioned just now, is it a full-fledged or they also include Windows?
That
So
is not
so yeah.
okay. All right. That is basically a full-fledged bank. Uh, a setup. I can give example like RHB. Yeah, RHB in the past they only have RHB Bank, for example. So they started with RHB Bank with Window. And then when the government urged most of the local banks to set up their own subsidiary, so they set up RHB Islamic, wholly owned by RHB Bank, which means they have separate capital, separate board of directors, separate incorporation. So these are all the companies over the years, they have become their own subsidiaries instead of Windows setup, and all those 22 are full-fledged subsidiary or full-fledged Islamic bank. Yeah.
Okay, okay, that's fine. Okay, good. Please continue, yeah, madam. Thank you.
Okay. All right. We're talking about, would there be any more new banks coming in to do Islamic banking business? So it looks like it's very crowded. In Malaysia, we are a very small country of what, 34 million, 35, 36 million people. Um, opening up a new business is something that they need to consider very deeply, whether the business will be profitable, whether there will be enough returns for the shareholders. So internally, for any organization like us, Bank of Tokyo, then now MUFG, we really look very deep and very in depth uh, on internal considerations. Yeah, we need to look at the strategic direction of the bank, because you may not have seen Japanese banks in Malaysia having ATMs or having counters, right? uh, or even foreign Indonesian banks or Chinese banks for that matter, having counters, over the counters transactions, right? So these are all foreign banks that focusing on corporate business. They don't need that many branches. What they need is to penetrate into Malaysian market, maybe corporate Malaysian market, and also ensuring that their returns are as per the targeted by the shareholders. And some of the banks, foreign banks that are coming in Malaysia also, um, the direction is more of serving some of the segments from the companies coming from their own country. Probably Chinese companies based in Malaysia, having joint ventures in Malaysia, like Japanese bank. We focus also on serving corporates that have business in Malaysia, or probably have joint ventures with companies in Malaysia. So they focus initially in the beginning of the years, they came in to focus on these segments. But of course, over the years, they have enhanced their capabilities, they have enhanced their profiling, everybody understands their capabilities and uh, like the way they're doing business with this bank, and eventually they also ventures into um, doing business with the local companies. Capability wise, of course, some banks want to come in big. Coming in big, then it will be a sample of banks that coming in with big capital and become a subsidiary. directly coming in as a big uh, entity, while a smaller ones that going into Islamic banking now would want to go into an Islamic banking window. Um, Later on, I'll explain why Islamic banking window do not have to have a big capital as compared to having a full-fledged subsidiary, but can still leverage on the bank's capital to do Islamic banking business and also manage to segregate. I believe many people will be saying, I heard in the market, I think it's quite common. The understanding in the market is when we do Islamic banking window, the income, the proceeds, the funds, the activities are commingled with the entity, because entity is conventional, capital is conventional, but now they have window. How can they segregate and make sure the activities are not commingled and purely segregated? So later on we will talk about that. That is also important because we do not want to breach Sharia regulations as well as the Bank Negara regulations. So that is also a consideration before they come in, whether they have the financial capabilities to enter as big subsidiary or to enter just set up as a window first. Yeah. And I think most important is also the non-financials bit, which is people and process, getting the resources, understands what is Islamic banking, having the right skills, having the right understanding, and also the right process. Yeah. Next is external consideration, which is market outside. If you can see currently, demographic of the people are different. Requirements are also different and sophistication as well as compared probably 20, 30 years ago. If you start Islamic banking 20 or 30 years ago, a lot of gray areas. So when you actually buy Islamic banking products or you actually take Islamic banking products, you are basically relying on the sales people to explain to you what are the difference between Islamic and conventional products. But I think most consumers nowadays, corporate as well as individual, are very much sophisticated. They financial literacy is also quite big. They can make comparisons on offerings in the market. They even can argue on whether it's really Sharia compliant or not, although sometimes it might not be that accurate. So I would say that going into the market now as new entrants is very much more challenging because of the markets are becoming more sophisticated and understand. I would have much better comparison to make in terms of the offerings. Pricing is even also, and in terms of retail, you would be able to also compare prices from banks, right? Currently, if you go into internet, there are so many portals that provide price comparison for various products, whether it's hire purchase for the car, or whether it's for the your personal financing or house financing. So it's pretty much an open market there. So these considerations also is something important as new bank coming in to offer new Islamic banking business in the market, and of course competition. As you can see, the markets are very crowded already in Malaysia. So if competition is in locally is something that the bank feels too harsh, then they might want to change the strategy to go moving beyond Malaysia, right? Economic environment, interest rates, also rising of interest rate, volatility of interest rate also a consideration because these will also impact the bank's capital, impacts the bank's profitability, and also what type of products they want to use, as well as inflationary, all these economic indicators, purchasing power, and also different financial crises. Financial crisis also would impact how lucrative, I would say, how profitability would affect any new entrants to the market. And also regulatory governing laws is the most, I think the most important thing now. As you know, financial industry is a heavily regulated market by the regulators. In fact, I would say that those entering into the market now would have more, I would say, a lot more to look into as compared to last time. If probably we look into entering the Islamic banking business 20 years ago. At that point of time, regulations are still not as advanced as now. At that point, even when we want to appoint Sharia committee to advise us on our products, at that point in time, we can actually appoint a Sharia committee that sits in another bank. So meaning if a Sharia scholar that sits in bank A can also advise another bank in bank B or bank C at the same time. So that gives more flexibility for people to find Sharia scholars, top ones. Sometimes they just choose the top Sharia scholars to also do advisory for them. And at that point in time also, Sharia requirements are not coded, meaning to say if product A has certain Sharia requirements, 20 years ago, at that point in time, Bank Negara did not actually code Sharia requirements. Bank Negara allows for the bank to consult the Sharia committee whether the Sharia requirements are okay or not. So that was then 20 years ago. But if new banks are coming in now, or even you, in any of you individually wants to go into the banking market, Islamic banking market now, there are too many regulations, too many, I would say, requirements that aim to strengthen governance lah. Yeah, it's good actually for the market. Now, if we want to have Sharia committee to advise the bank on what are the matters, that Sharia committee can only sit in one bank at one time. So if that Sharia committee sits in bank A, they cannot sit in bank B, unless this Sharia committee sits in a different type of banks. So as you know, in Malaysia we have commercial bank, yeah, we have bank that is governed under the Financial Services Act. We also have developmental bank and the like of Bank Pembangunan, SME Bank, Exim Bank. These are developmental institution, right? So these are another type of banks. So this is the second type. So, and also Takaful. This is the third type of financial industries. So each one Sharia committee, one person can sit in all three, so long these three are different industry. So there's less flexibility to get Sharia scholars nowadays because of that restriction. So that's number one. Number two, in terms of Sharia requirements, how to derive certain Sharia structures, Sharia contracts. Those days, banks relying on the Sharia scholar, Sharia committee to advise them, and Bank Negara, most of the time will be taking decision of the Sharia committee as good. But now, if you enter into the Islamic banking market, you can't just leave that to the Sharia committee to decide. There is actually a coded, I would say, not coded, I would say that guidelines that Bank Negara issued to even regulate how you derive a Sharia contract and how that Sharia contract can be used in your product. Even if your Sharia committee have the opinion on how to use certain Sharia contracts, Sharia committee also must go back to Bank Negara, because Bank Negara also has Sharia Advisory Committee, the National Sharia Advisory Council. Meaning to say, a lot more to look at, being a new entrant into the market, to understand more governance, more Sharia governance as we go in, right? And as you can see here, under the third bullet here, countries master plan or blueprint. This is also important. Even if you as an individual looking into career into Islamic banking, I think it's pretty dry. It's pretty strategic to look at it, but it's good to read. Maybe if you don't know, if you don't realize, for any countries, Malaysia, Indonesia, or any other parts of the world, Ministry of Finance over the years would have sort of a blueprint. So they would have like a financial sector blueprint. Or the first 10 years, the Malaysian government is looking into developing Islamic banking. Hence, they allow window. Malaysian government is looking into, at that point in time, into internationalize Islamic banking. So they allow more foreign banks coming in. So if you read this country's master plan, financial sector master plan, which issued by Bank Negara and Ministry of Finance, you would be able to understand, oh, this is the market, this is the priority sector, the priority segment that the government is looking at. So if ever you want to go deeper into research, or even you want to go deeper into career-wise, so you will be able to see what the government is looking at years ahead, and what will be rules, requirements, what will be the incentive or benefits that the government will offer for you to be able to plan a career plan, or even if you're in an organization wanting to drive the business, this is also important. As for the current blueprint, financial sector master plan issued by Bank Negara, the one currently now issued is for 2020 up until 2026. So now is basically, everyone would know, focusing more on sustainability, ESG, looking also into financial inclusion, that we've seen now, government don't want anyone to be left out. A lot more measures are being done at the micro institutional level, also individual level, that under underserved areas. So these are mentioned in the blueprint. Government also mentioned, or even Bank Negara mentioned about where are they looking into financial sector also. So these are the markets, or these are the information that is good for us to understand on the umbrella level, on the strategic level, so that we'll be able to see what are the action plans, or what are the things that we can focus also for us as consumer, or even practitioner. Sharia governance and practice, as I mentioned just now, I've already outlined. Governance is very much more important nowadays. A lot more requirements if you becoming a new bank. A lot more requirements for us to follow, because currently in the market there are various practices that could be different from one bank to another. Even if you go from practices between countries, also different. So those who are involved in banking segments, you would realize that a commodity murabahah, a simple plain tawaruk structure in Malaysia, can be so different in another country. Or even in certain countries, tawaruk or commodity murabahah structure is totally prohibited. So you will be surprised to see how different is the Sharia practices among different jurisdictions. So this is also something that we need to know, so that when we are not just focusing on local business and we're going outside Malaysia, these are the areas that we need to understand. Although it is still Sharia as general, but how Sharia contracts are being defined in different jurisdictions are different. Yeah. Okay. I think I'm already at the last page of the slides, but I have appendices that might be important as there are Q&As, and I can share the appendices more in detail.
Yes, madam. If you don't mind, I interject. This is the one that previously mentioned in your explanation regarding the Windows to full-fledged, because there was a question. The question here is basically, can commercial banks like MUFG, where they're still doing Windows post IFSA 2013? So that means it has to be full-fledged Islamic banks, or they can remain to be Windows after the implementation of IFSA 2013? Okay, that was our first question.
Okay.
Now, also in relation to your Sharia governance just now, in the case of some banks, for example, the number of the Sharia board, the number of Sharia board members, some could be 3, some could be 5, some could be 6. So basically, of course, the quantity and the expertise of the Sharia board member, which is the backbone of the Islamic banks, they provide inputs, in terms of the Sharia governance.
Yeah.
So therefore here, in the case of banks, for example, having limits, for example, 3, or some have 4, some have 5, which is quite inconsistent.
Right.
Will that basically impact the Sharia advisory, Sharia matters and so on? Perhaps you can comment on that, madam. Thank you.
Thank you. Question 1 is on whether conventional banks can offer window post IFSA, yeah?
Yeah.
IFSA, okay. There's nothing changes much from the old regulations act from BAFIA into FSA from Islamic Banking Act into IFSA. There's nothing much difference other than it compiled the entire three pillars of Islamic finance into one. Those days we have Banking and Financial Act for banking environment. We have DF DAFIA for developmental financial institution, which is like the SME exam and stuff. We also had those days Insurance Act. So when FSA came in, they actually combined these three segments into one. So FSA covers finance segments, everything all in one regulations, act. Banking Act is in there, Insurance Act also there, fund management also there, some of the services business are also there. So under one. But gist of the whole thing from BAFIA, from Insurance Act, those days are still the same. Even in the old act, there were section mentioned on section 124. Section 124 of Banking Financial Institution Act those days, before FSA, mentioned if a central bank approves the business of Islamic banking window to be licensed under the entity, that entity can offer Islamic banking window. So the same regulations, the same provisions are imported into FSA that also allows for conventional entity to have set up in window in its conventional entity, but the section has changed lah because of the changes of the provisions of the law. So basically, whether pre or post IFSA, the requirement, the ability to offer a window setup is still available. Of course, subject to Negara approval. And once this entity, this conventional bank has window, they are not just governed by FSA, but they are also governed by IFSA, Islamic Financial Services Act, to ensure that they manage the governance, Sharia governance well. So that's the answer. For question number 2, in relation to the composition of Sharia committee that are not the same from one bank to another, these are also evolution over the years. Those days, regulation are quite flexible in terms of number of banks. In the early years, number of Sharia committee in the banks, the Bank Negara then was quite flexible. But of course, then they had requirements of Sharia background, Sharia committee that has Sharia background, Islamic jurisprudence, basically knowledge for them to qualify to become Sharia committee. But number of Sharia committee, how many of them were not dictated very clearly. But now it is very, very specific. Negara even put a very, very specific requirement in the Sharia governance policy, SGP. You can go through the website and look at it. It's even more detailed. For a full-fledged bank, the minimum requirement is 5. And within that 5, they must have majority that are Sharia background by profile. And the rest can be either those who are already in finance industry, but they have experience in Islamic banking, not necessarily having Sharia qualification. So meaning if it's 5, majority would have to be Sharia by background. So if it's 5, 3 out of 5 should be Sharia by background. But when you come to Islamic window, they allow for minimum requirement of only having 3 Sharia committee members, but the majority still stays lah. So if it's 3, then 2 of them will have to be Sharia by background. But of course, banks with bigger capacity, large capacity, would have want to have more Sharia committee in their composition, depending on their how frequent they need Sharia committees consultation. They might have complex or more volume services that require Sharia committee consultation, so they might want to have more Sharia committee members, even for window, although the minimum is only 3. So so basically Bank Negara only putting minimum requirement for window and some requirement also for full-fledged. Yeah.
Okay, please move on, madam. Thank you.
Okay. I think that this final slide is talking about more of current challenges as new entrant. Organic growth is where some entity would want to go more grow internally, meaning to say if they want to set up a window, they might want to set up uh, from uh, from a small setup, and then once profitability kicks in, they're able to expand the capital. Gradually, they might want to expand into branches, or even those without branches, they might want to go outside Malaysia. So this is very organic growth. But we've seen in the market inorganic growth when they come in and they acquire entities, or they acquire existing license. Um, I mean, you would have seen in the market, even the full-fledged Islamic bank merge between themselves, right? Like MBSB that merged between Asian Finance Bank, for example. So these are inorganic strategic direction because they want to grow faster, but they want to go into those gradual growth, and they go for acquisition. Um, Next one is expectation to start off at high standards. As I mentioned, when you become the latecomer, you come in, you just came into the industry. The industry has already reached a level of sophistication. The industry has already reached a level of standard practices. So there's no longer, I would say that central bank or even consumers will be saying, "Oh, it's okay. They just came in and the industry is just new." So then they're no longer able to say that. So they already come in at the high standards or high market practice expectation. So they need to come in already understands what the market has gone through, and they need to start already at a very high standards. So meaning to say, they need to already start with a very high expectation and very high governance level, right? So these are I would say, the biggest challenge, because as you moving into a new business, a new market, um, you would need more skilled people or good strategic direction, and this would have to come from outside, right? So if you're building business organically, you have to build from inside. You get to bring your own people, uh, educate them, and bring them together to grow the business. But if there's actually already a high standards out there in the market, so it's going to be very difficult to start from internal. Then you have to bring in new talents, and also of course it brings more cost to the company. So these are the greatest challenge. In terms of customer sophistication, we discussed just now. Another challenge, customers, be it corporate or individual clients, having more information. These are all borderless information world now, so they have more information, and whenever you offer a product, that product has to be able to counter all these probable arguments by your clients, or probable comparison of market practices or even prices. So this will be a greater challenge for the new entrants. And of course, digitalization. Everybody in the market is moving into that. And if you start afresh, then cost to enter into digitalization is also very, very something that they have to think of at the inception. And also financial inclusion, meaning to say, once you ready to offer a product, ready to come into the new market, you must also have this in mind. As we mentioned just now, the financial sector blueprint, the financial sector master plan mentioned by the central bank or even the Ministry of Finance, always stress about financial inclusion. You can't like provide certain products only specifically exclusively for to certain individuals or certain segments of market, but you need to ensure that your product, your strategy also include various segments of the market. So they prefer banks to be able to create products, or even to have the distribution channel to reach various markets, segments of the markets. Then, if you already in a banking environment or past banking practitioners, some banks are having to involve in high cost to even open up the rural underserved areas, like opening up a small outlet to be able for the rural people to withdraw money even in the rural areas, allow for some outlets to even to become agent to the bank for withdrawal. So these are all costs to serve the objective of financial inclusion. So it's also not easy to come in at this stage. A lot more requirements for us to consider, and also strategic partners. When we enter into a banking environment, we also need strategic partners. Some banks have various subsidiaries, as you know. Banks have their own insurance companies within the group. They have their own stockbroking firms within the group. They have their own investment banks within the group. So those already have strategic partners. They can grow very fast, although they are very new. But those who are going into the market, just getting into new to the market, and do not have such group of affiliates that can serve various markets, would be very challenging, as markets are already having all this. So you will not be able to reach the markets well without more strategic partners. So these are also involve cost and also strategic decision that will pose as great challenge to new entrant to the market. If there are any more questions, I'll just wait. For appendices is basically just adding on the detailed data to the previous slides that I've mentioned.
Okay, thank you, Madam. Basically, just to add in regarding the under explanation just now, this is regarding the level of sophistication that you mentioned, whereby we are talking about a very high standards now with the new ruling and so on, the new governance and so on, compared to when the Islamic banking was first introduced in 1983. So here, basically, as the audience here are mostly our students, so therefore, there are two things here. Number one, as you mentioned regarding the growth just now, the smaller outfit, for example, in order for them to grow, it's very costly for them to train from within, right? So therefore, they have to basically bring in or parachuted someone from outside. Okay, and now basically for those who are the graduates, the fresh graduates here, for example, how are they basically trying to enter into the market, whereby they just have a qualification, they don't have the experience, because experience matters, right? So therefore, maybe you can enlighten on this aspect. Thank you.
I think most of the fresh graduates, or most of the even finance graduate, they may not have Islamic banking exposure at all. So these are all, to me, most important. Those working in a venturing into banking environment, the basic banking or business knowledge is important. So Islamic banking is areas that I think can be acquired over time. And current, I think in the current market, they're very lucky. As you go in, there are many already certification and courses out there, very short certification courses out there that you can take while working, right? So these are achievable, easily achievable in the current market. Of course, it will take few years with the knowledge of Islamic banking that you gain for your certification. It will take not more than 2 years for you to be able to understand fully how it is being applied in an Islamic banking environment. So it may not be that difficult. So those in a financial background, graduates, I think, do not have that much issues. But of course, basic Sharia applications that you've learned probably in UAE, I think they have, right? Basic applications would help for you to gauge how to become a better Islamic banker lah, in a bank. So it might not be immediate, but it will help. Your basic knowledge in the university will help, but working wise, then you need to have additional certification to bring you, another quantum leap to that career lah.
Okay, thank you, Madam, for that response. So since we are still in the current challenges, basically there was a question here, quite interesting question. The question here is basically from your perspective as practitioner, yeah? What is actually the challenges if Islamic finance try to enter emerging markets like Russia and China? Because in the case of this Japanese bank, for example, they are basically coming in the industry whereby there is a proper growth. For example, let's say for this entrant, because you did mention regarding the crowded market just now.
Mm.
So if you want to move, for example, a new market, which is basically outside Malaysia, and we know that basically there is a very high potential in Russia, for example. So what is basically the challenges that that you may basically see, and how to basically adopt these kind of challenges into this kind of market? Maybe you can respond on that. Thank you.
Yeah, thank you. Um, I would say this is more of a demand issue rather than a factor of whether we can go in or not. Even in Japan, there's hardly Islamic banking interests locally in Japan due to demand, right? In Malaysia, it is so flourish because of the demand, because of the faith-based population. So I would say that we are very lucky because population are very much faith-based. So they want to do as Sharia compliant as possible. So there goes our Islamic banking grow as leaps and bounds. As opposed to new countries, even like Japan or Russia or China. Uh, these are, if you talk about consumer banking or retail, this is not a market that is easy for us. So it's always about demand. I do believe that the only way of reaching out uh, to any markets is all about demand. But to create demands is also more on awareness. But once we have the awareness, then another question related to demand will come, like what's in it for us, right? Why would Islamic banking be something good for us? Why would we need that? As an individual, probably to them, it is not something that we can sell. But in terms of corporates, for example, yeah, like in Malaysia, people will ask, why would corporate wants to take up Islamic banking product, right? So this in Malaysia, another example that I can probably mention, we know that when company goes public, they want to expand their business, they will list their business in stock exchange, right, in Bursa Malaysia. So when they list their company in Bursa Malaysia, meaning they want to expand their business, they want to bring in more public shareholders. People will buy shares in their company and they can use the money to expand the business, which means the company now not individually owned or privately owned. The company now is publicly owned because of the shareholders' money from the market. So in this context in Malaysia, we know these companies will always want to maintain the public shareholding because they need the money to grow their business. And of course, as you know, shareholders, local shareholders in Malaysia, will always want to ensure that when they invest into companies that are Sharia compliant, right? So you wouldn't want to invest or putting your money as shareholder to buy shares in a company that involved in casino or gambling, right? So you want to buy shares in companies that are neutral or Sharia compliant. So where do you go to look at whether the company is Sharia compliant or not? You go to Bursa. Bursa have list of Sharia compliant index, of which index are also being measured by parameters by the Securities Commission. So how does Securities Commission do that? All these listed companies will have financial statements. So Bursa Malaysia have that on the website. Securities Commission will have a parameters to say that if their gearing level or their debt level is high and that level is mainly taking borrowing from conventional banks at certain parameters, then the company is not a Sharia compliant index, Sharia compliant listed companies. So that brings the motivation for the company to try to find borrowing from Islamic bank. or even parameters that Securities Commission says if you want to be Sharia compliant, listed company in Bursa so that shareholders will come in and buy your shares, you also need to make sure that your cash placement, business would have cash in their balance sheet and they want to place their cash into Sharia compliant banks. These are also have parameters, certain percentage of their book. So meaning to say, for the company that wants to make sure they remain listed as Sharia compliant listed entity, they would have to follow this and they need to go to Islamic bank to place their cash or do the transactions. So in countries where shareholders are also looking into Sharia compliant companies, the companies will have motivation to go to banks and to use Islamic banks for them to do business. So this kind of environment would spur the corporate entities, the business, to also want to go to Islamic banks and do business with Islamic banks. Hence, in the market like China, Russia, or even Japan, their constitutional shareholders, their markets are not like this. Hence, the motivation to do that sort of to penetrate that market would be very very the motivation would be very very low because of these elements lah. Yeah. So of course outside the market, we've seen even Chinese industries outside China that have done business globally. They probably do business with Islamic countries like of Malaysia or the like of Brunei that has oil and gas, the like of Middle Eastern. Sometimes they JV with Middle Eastern companies, right? So China company wants to build, have the expertise to build highways or to build train in another countries, like in the Middle East, for example, they will have JV with local Middle Eastern company. So this Middle Eastern company would have motivation to take up Islamic bank. They say if you want to do business, you want to construct a highway JV with you as a Chinese company, we would want to go with an Islamic banking financing. So with this motivation, although they are Chinese companies, but they are based outside and JV with outside companies, they may want to take up Islamic banking offering. So to just go into this market on their onshore environment it's still a challenge currently. Even in Australia, they have one Islamic bank, one or two. The rest will be more cooperative societies. Even in Australia, these are all centered around to cater for small Muslim communities to buy house or to buy cars. The Sharia compliant, more cooperative setup, similar to some of the European countries. Even in US, they have similar to like a cooperative setup rather than a full Islamic bank in the US. Hope that answers the question.
Yeah, thank you, madam. I think you can basically proceed with is this the last slide? This is the last slide, right?
Yeah.
Okay, because there was a question after that I would like to forward regarding VBI. Yeah? So maybe madam can proceed. Then after that we will continue with the question coming from, even there is a question from Bahrain as well. Please continue.
Okay. I think this appendices is just to show it's too long, I think. I just want to reiterate that I mentioned about financial sector master plan just now. There were a few blueprint, 2001, 2020. There are many set or target set by the government. At that point in time, they said, okay, the Islamic banking market should reach 20% market share by certain time. So then we were able to achieve that, and also up until 2020, we wanted to achieve 40% of all banking should be Islamic banking. Yes, I think the government, central bank, and the markets are able to achieve. We had about 42%, I think. At that point, we were able to achieve the target of total banking industry assets are 40% is Islamic bank. And internationalization also is something that they focus on at that point in time. So that's why we see foreign banks doing business in Malaysia. We have diversity of Islamic finance players, various types of business, Islamic finance business, including the capital market side or the sukuk side. And we've seen operational facility of local foreign banks also here, meaning to say some of the banks are able to set up either like a rep office instead of having a full-fledged license. They can have a representative office, just to look into potential business first before really going into the business full-fledged. And now is here, as I mentioned just now, focus is more on digitalization, uh, deeper global integration, meaning to say we are not just locally focused. When we do business locally, with the system, infrastructure, payment system, segments of the market, we need to be able to integrate with the global market. We can't do a payment system that is only very much local concentrated or local compatible. It has to be very much global compatible. And also greening finance and financing green. So this has two different meaning lah. Greening finance meaning there are finance structure or finance offering that we need to make it green, try to greening the finance. And also if there's any green opportunities out there, we need to be able to serve that well and to finance that green opportunities. So these are the main thing now lah, up until I think this decade will be the focus. Right. I think I'll just go last slide. This one is about capital management. I think question on segregation and commingling is also something that some people feel they don't understand. Why you do window in an entity that is conventional? How do you segregate your capital from conventional and still saying that you are Sharia compliant, right? So let's look at this illustration. Yeah. Okay. Don't look up here. Just look this side. Yeah. Okay. This side I mentioned about Berhad entity, the entity, the conventional entity. Say for example, this entity does not have or does not want to open another subsidiary to do Islamic, because that will require, Bank Negara will require 300 million capital to set up a new subsidiary, a new Islamic. So that is a lot, and they don't know whether they can make money or they can really grow or not. So what they do, they open up Islamic banking window, just another department. You know, like they have few departments, so they open a new department called Islamic banking window. So this setup will not require Berhad entity to have 300 million capital additional, but rather they will have to segregate. Meaning, if they have 1 billion capital in Berhad book, what Berhad can do is they have to segregate the ledger. Meaning to say they have to show in their system or in their ledger that out of 1 billion capital, they have to carve out. Meaning to say, Bank Negara says for window, you have to have 20 million capital separately from Berhad. So Berhad have to carve out 20 million from the 1 billion in a different set of ledger and do a bookkeeping lah, so-called bookkeeping lah, balance sheet, profit and loss based on that 20 million capital. But again, there is a disadvantage of having smaller capital, because Bank Negara and also international banking standard says if you want to give financing to your client, you cannot give your client financing 25%, more than 25% of your capital. So we need to say if window is only having 20 million capital, so the biggest financing that IBW could give to any one customer, so if your customer A needs 20 million financing, so IBW will not be able to give to that client. IBW can only give 25% of 20 million to client A. Example, 25% of 20 million is like 5 million, right? So you can only give one client 5 million and another client up to 5 million. So it is very small capabilities lah when you do IBW. So because you can't use capital from Berhad beyond, you can't use the remaining 980 million level for you to give to your client. Unlike Berhad, so because of the capital, they have 1 billion capital. 25% of 1 billion is 250 million. So Berhad, as a conventional entity, can give to their client a conventional offering up to 250 million. But again, they cannot use the capital of IBW. Meaning, if they don't have enough capital, they can't take the 20 million go back to Berhad. So that's a requirement by central bank that they cannot ask for that money back. The capital cannot be returned back to Berhad. So this is workable only if IBW is focusing on retail customers. Meaning, if you serve customers that wants to buy a car of 100,000, 50,000, this is doable, right? Because it doesn't come up to the max of 5 million. If your client is corporate clients that requires 100 million, 500 million, then this is not workable. So what Islamic banking window does in the market, usually we will do a wakalah or like a contract to have money invested into IBW for IBW to give client certain amount that beyond the 25% just now, right? So for example, the client for IBW wants 100 million. Now IBW says, no, I can't because my 25% of my 20 million is too small. So I have to go do example. The simplest way that we could think of is a wakalah arrangement. Those of you who understands wakalah, there's a capital provider providing capitals. The one is providing the capital will bear the losses. If there's losses to the venture, they will have to bear the losses. If there's profit to the venture, they can share in terms of the profit. So they can agree in the beginning, if I give you 100 million, IBW, Berhad says, IBW, I give you 100 million. And within that 100 million, if you make money, so 80% belongs to me, 20% belongs to you. So that can have, they call it profit sharing ratio, right? The 80-20 or whatever ratio that they want. So by doing that, we are allowed to borrow, so-called, in a Sharia compliant manner. So meaning the 100 million that customer wants here, we can use a wakalah funding from Berhad of 100 million and IBW as entrepreneur, only as an agent. In a wakalah environment, they're only an agent to do the documentation, the Islamic Sharia documentation for the business and disburse money to client as a financing. So this product structures are all must be Sharia compliant. And when there's 20%, when client pays, the profit from the client, 20% will be in IBW profit, the book of IBW, and 80% will be in the bank. But of course, bank and IBW is the same entity. When they consolidated the financial statement, the bank will have 100% of the profit lah, if you can see in the book. But if you look only at IBW book, you only have the 20% profit. So that's how a small capital environment for IBW work when they want to give bigger financing to client. So this would work so far in a banking environment. So this only version that I mentioned to you now here is only the Berhad or the entity. So even for Berhad, if they have bigger setup outside Malaysia, like our bank, Japanese bank, we have parent bank in Japan that have trillions of capital. So if even the 1 billion capital of here is not sufficient, they can also do a version of that with their parent. Similar things that can happen here can also happen up there. So meaning to say any fund flows here are all Sharia compliant. So it has also have to be segregated, and if it belongs to Berhad window Islamic, that cannot be returned back to the use of Berhad. So that's how segregation and non-commingling happens in this kind of environment. Okay, I think that explains all. The rest are all very detailed, except for this one. If you can see the picture here, we speak about dual heading. In a small capital environment like window, we do not set a different department that can do everything. Usually, all departments will have to do both conventional and Islamic. So, meaning to say, frontline, the one who do sales, seeing customers.
Oh my God. My God.
Sorry, somebody might have.
Yes, yes. Let me mute.
Okay, sorry.
Yeah, it's fine. Okay.
So, the picture here depicts dual heading, meaning one part of the body is doing Islamic, the other part is doing conventional. So every departments in the bank will have to have understanding of how Islamic banking business work. So those who are doing sales will do sales for conventional Islamic. They need to understand contracts for Islamic. Those who are doing back office, entering into a system, disbursing clients or looking at legal agreements, they need to also look at legal agreements both in the context of Islamic banking as to conventional banking. In the risk department, those who are calculating the capital, doing reporting, they also need to understand different capital measurement for Islamic banking product and different capital measurement for conventional. So everyone will have to be dual heading. And this is also a challenge because being a conventional bank, there are not many people with Islamic banking knowledge. So the role of Islamic banking window usually will have to be supporting all this, ensuring people are being equipped with information, with proper knowledge. Lastly, this is going to be very, very last. Okay. Non-compliance, zero non-compliance tolerance. When you have operational hiccups in a conventional bank, that operational hiccups may or may not be a penalty that is severe. But for a Sharia compliant, Sharia non-compliance in an Islamic banking environment, it is very, very critical because Sharia non-compliance may attract a penalty from the central bank. And this also has to be disclosed in the financial statement. If today you go to any of the financial statement of the Islamic banks, you can go to the Sharia report, or I don't think maybe it's only on the Sharia report page. That will show what sort of Sharia non-compliant penalty that they got. And penalty is not just penalty, they will have to disclose in the annual report. They also have to pay penalty. Okay. So here is the nature of Sharia non-compliant event, SNC. They wrongly calculated profit and or late payment charges. They compound the late payment charges, which is not supposed to be done in Islamic banking environment. So 4 types of cases in Malaysian banks. And these are all the list of other Sharia non-compliance activities that happen due to operational hiccups or whatever. So these involve 1.5 billion of penalty paid by these banks to the regulators. So it is not something to be taken lightly. So since they are dual heading, although you are dual heading, it's not something easy to just don't take for granted. So everyone needs to understand clearly what they are doing so that they will not cause this Sharia non-compliant penalty, and it is now disclosed in the annual reports and also paying penalty to the central bank. Yeah. Okay.
Thank you, madam. So time is running very fast. We have just seven more minutes to go. So in fact, you have covered a very broad perspective from institutional level and even at the individual level, at the landscape, the platform, sustainability, and so on. And very recently on the capital management, which is very interesting because you also talk from the Windows operation perspective and also what we call as dual heading. This is something new to me, this term, dual heading. Now we have just another 7 minutes, and I just like to allow just a few more questions, and these are the questions that you can basically lump it up, as we end to 4:30. Number one, regarding this what we call as VBI, yeah, madam, yeah. Because you see here that regarding this VBI, because this is the requirement by the central bank. And then as the banking setup is not only on the profitability, but they also need to basically comply the so-called sophistication in terms of the market need and so on. So how Islamic Bank basically trying to fitting into this basically this new demand, especially in fulfilling what we term as maqasid syariah. That's number one. Now, number two is regarding these questions on integrating blockchain technology. Integrating blockchain technology, and then basically how this blockchain technology is having potential to address the issues of challenges that you mentioned just now. All right, and then of course how it relates to the from the perspective of the shareholder and so on. Okay, and then the last question that I can allow here is regarding the a question that requesting for examples of a parent bank that the Berhad Bank will get capital as similar mechanism with the IBW that you mentioned just now. Okay, and then perhaps you can basically conclude with regards to the last question, Sharia audit, and then it's how compulsory it is, in the context of IFI, because I can understand this because we already have the Sharia board members, okay, and they are basically the experts, and then having audit to this Sharia board member, I mean, that in the way is also increasing costs in terms of operation of State Bank. So you have just another 5 minutes here, madam. Maybe you
Okay,
can
all
basically
right.
respond to all this. Thank you, please.
Okay. In terms of VBI, it's something that I would say mandatory to all Malaysian banks now. It's a regulatory driven thing. In addition to its regulatory driven thing, it's very much a globally driven matter. So most banks, local, of course, they're driven by their regulators. But for us, foreign banks, we are driven also by our parent bank. Our parent bank has been the signatory to the Equator Principle. It's we sign up with the international standard setting bodies to follow certain principle, including when they do business outside their countries, they might make sure that they have to not involve deforestation. They might not involve in opening up lands or financing business that will cause to the native, to all those aborigines and stuff like that. So we have that already. As for our bank and most foreign banks, they are already complying to the global ESG or Equator principle if you go to the website. So then it's already something that not alien to most banks to do under a VBI environment like Bank Negara Us. It's something that is already familiar to us. And of course, to align with Maqasid is very much Maqasid. Even when I have my Japanese colleague who first time understanding VBI and understanding Islamic making a Maqasid Sharia, they say why nobody has never enlightened us that Maqasid is actually ESG. To us it's like beyond, our Maqasid is even beyond ESG, right? So it's very much aligned. It's not something alien to any banks that even not coming from Malaysia or not even doing Islamic banking. It's already a global push to many. Blockchain, whether it's might be able to address all this, I may not have that expertise to comment. But again, it's something that we also, in terms of Islamic perspective, we are very much concerned also on how blockchain is accepted in a Sharia perspective as medium of exchange. I think a lot more discussion has been done also locally by many Sharia scholars and also market players. So if that addresses the true meaning of what medium of exchange accepted in Sharia perspective, then it should be able to address what are the challenges that we mentioned just now. Well, in terms of the parent bank putting money into Berhad and Berhad putting into Window, right? We mentioned just now, maybe in the slides earlier, I mentioned here first line, second line, third line of defense. This is where Sharia audit comes in. It's a requirement, it's a mandatory requirement by the central bank. Each bank will have Sharia audit. First line will be those who are facing the client and also those who are doing the operations. The operations people, back office people are first line. They are the one who understands and who knows there are hiccups or not in their business. Second line are the risk people, the legal people who will check whether you are doing will impact certain risks of the bank. These are Sharia review, Sharia risks. Third line of defense is those who are checking after second line and first line, meaning to say Sharia audit mandatory because they need to play the role of third line of defense. So that if first line fails, second line fails, they will do the third line. This is mandatory. So Sharia audit is a mandatory part of any Islamic bank or Islamic window. So meaning to say window or not window or full-fledged, we are still subject to the same governance level. So we are very much the same like full-fledged lah. Very, very highly, has to be highly Sharia compliant. So that's how we work. Hopefully that answers all the questions and give some insights to some of you how a new entrant in Islamic banking business, work and how we manage your business.
Alhamdulillah, thank you very much, Madam, for a very insightful sharing. And I can say that the information is voluminous. I mean, a lot of things that basically we need to look into it. And then it has benefited the audience so much. And then I also like to thank the participation. So with that, again, on behalf of IBF, Madam, I would like to sincerely thanks for your time, for your sharing, and also for your practitioner's experience in basically giving more inputs to the IBF community. With that, we end our session with tasbih kafarah. Subhanallah bihamdihi, subhanallah bihamdika, asyhadu an la ilaha anta, astaghfiruka wa atubu ilaik. Thank you very much.
Thank you.
Assalamualaikum warahmatullahi wabarakatuh. Thank you,
Waalaikumsalam
Madam.
warahmatullah.
Thank you. Yeah, we will end the session. Thank you.